55-point up moves are not bad at all. That's how the Nifty's opened up.
But it's a pretty good-looking screen right now. It's been a good Wednesday morning so far.
We see a decline in overall revenues compared to Q4.
Bajaj Finance, we anyway had the operational update, and it was a blowout quarter, right? After a while, Bajaj Finance grew at that 30% run rate year on year. We have Tech Mahindra numbers out on the screen as well. That's the profit figure. We're working with a bit of a revenue decline. That's the poll. Looking at a dollar revenue decline of about 1.5%. So let's see once that number flashes in.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra and here are the headlines for the day. Sensex gains over 350 points and the Nifty nears 19,800 ahead of the US Fed rate decision. Bank stocks lead the rally, mid-caps outperform the blue chips. Bajaj Finance declines over 2%. A net interest margin decline weighs on performance, but guidance improves. Punjab National Bank rallies over 4% after reporting the lowest slippage ratio in 10 quarters. Axis Bank missed street estimates for the first quarter. Dr. Reddy's and Cipla beat estimates in quarter one. DRL reports a 29% rise in revenues. Margins cross 30%. Cipla's revenues rise nearly 18%. R&D investments see a sharp increase of 27%. Tech Mahindra misses estimates on all counts in quarter one. Constant currency revenue declines over 4%. Profits down 38%. Management calls it a temporary setback. Mahindra Group has likely bought 4% stake in RBL Bank from the open market. Sources say Mahindras are keen on buying 15 to 25% strategic stake if the RBI chooses to waive the 10% threshold for corporate shareholding in banks. That's an exclusive. And here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Mihir Vora, Director and CIO at Max Life Insurance. In Big Corporate Voices, we have R. Shankar Raman, the whole-time Director and CFO at Larsen & Toubro. Okay, with that, let's move on to the day's trading action. Nifty and Sensex ended 0.5% higher, with the Nifty within touching distance of 19,800. Financials and Reliance led the market higher. Nifty Bank snapped its 3-day losing streak to gain in line with the blue chips. Prashant Nair is here with the details. Prashant.
Well, it was a strong day once again. Could have been stronger. The day's high, the market was a lot higher, but, well, nothing to scoff at with a solid 90-point gain on the Nifty. The bank's index comes up on your screen. It was good going there as well. The handoff from Wall Street early on was good, and that showed through. Mid-caps and small-caps, maybe a little bit of, relative underperformance. To be sure, both indices ended higher. The small-cap index was up about 0.25%. The problem is markets are used to more. Okay, let's just run you through what happened on the large caps. L&T was the big mover. Britannia followed. There was ITC, which reversed some of the losses over the last couple of days. Axis Bank, Reliance and Sun Pharma were the other movers. In the last 60 minutes, there was some moderation, largely thanks to Bajaj Finance. The numbers had come out, and there were some issues which the market did not like there, especially on the margin front and perhaps guidance in the asset quality. The stock was down marginally. Finserv was also lower. In the broader market, this is where the real action is. And I'll start with news flow / results reactions. Tata Motors, DVR, RBL Bank, of course, this is full reaction to the CNBC-TV18 exclusive. Amber was higher on the back of strong guidance. Piramal Enterprises that planned for a buyback. Jyoti Laboratories, Tangamail, both reacting for the second day running to results. Motilal as well, financial services, 5-star Spandana, lots of these financial names, second-tier names which did very well. And a sector like innovate companies like Rupa, Lovable, Lux Industries were flying away as well. I could go on, lots of names there which did well. Losers as well, Canfin Homes, we had the management early on, that 40 crore fraud, the markets sold that stock. SJV and Aarti Drugs, Deepak Fertilizer, PNB Housing were some of the others which were lower. The big one, of course, from a global perspective is the Fed hike later today. In all likelihood, we'll get a 25 basis point hike. But beyond that, it does look like from the price action of the last 2 days, the market may have completed a 4-5 day consolidation kind of period, and perhaps it wants to look ahead. Back to you.
Prashant, thank you so much for joining us with that analysis. Let's talk about some market opinion now, because we have seen some expert opinion coming in for us. Mihir Vora, Director and CIO at Max Life Insurance, says the financial sector has broadly been positive, but the IT sector has seen some disappointments. He also lays down his top bets.
Biggest sector, which is financials, has broadly been a positive. There have been more positive surprises than negatives, I would say. The second biggest sector, which is IT, there have been some disappointments. we have 2 or 3 big thrusts from the government side, which is also helping a lot of these mid-sized capital investments. For example, if we talk about defense, if we talk about railway spending, if we talk about we talk about investments in transmission and distribution. Road anyway has seen momentum for the past many years, but these 3 or 4 new themes like distribution, defense, railway capex are things which were not really present earlier. I would be more comfortable with the large cap indices than the mid cap and small cap indices, because while we did talk about all these themes and exciting growth areas, stocks also have moved quite a lot. The worst of rural slowdown should be over, and the worst of commodity price pressures also should be over.
Okay, all right. That is an expert opinion coming in. But moving on to the second headline now. Bajaj Finance declined in trade after the company reported first quarter earnings. Net interest income saw a growth of more than 27%, but this was slightly below estimates. Profits beat estimates with 32% growth. Bad loans remained below 1%, and new loan growth has hit a record high. Abhishek Kothari joins us with the key numbers. Abhishek.
Well, to begin with, the guidance is the key highlight of the presentation that they gave. Gross NPA ratio, they have decreased, to about 1.2% to 1.4% range from the earlier range of 1.4% to 1.7% range. On the net NPA ratio also, the upper end guidance have been reduced by 20 basis points to now 0.5% versus 0.7%. Return ratios, that's the best part of the guidance increase. ROA on the lower side has been increased by 60 basis points and on the upper end by 30 basis points. Return on equity, both on the lower end and the upper end, it's been increased by 2%. Strong AUM growth, as you mentioned, it's up about 32.5% YOY and about 9.2% sequentially. Calculation shows that the net interest margin might have declined by almost 40 basis points YOY and about 16 basis points sequentially. The NII was slightly below our poll by almost 300 crore. Operating profit grew by 8.3% quarter-on-quarter. Provisions spiked up, despite which the PAT has beaten our poll. Back to you.
Okay, all right. That is about Bajaj Finance. But Abhishek, stay with us. Punjab National Bank is also in focus on the back of numbers. How did they look?
Well, seasonally, Q1 is a weak quarter when compared to Q4 in terms of asset quality. But take a look at Punjab National Bank. The slippage ratio is perhaps the lowest in last 10 quarters, and that's helped gross NPA ratio being the lowest in last 7-8 years, or let's say 31 quarters. So slippages have declined by 40% on a sequential basis. Annualized slippage ratio is at a 10-quarter low of 1.1%. Asset quality has improved. Deposit growth has been pretty steady at 13.7% YOY and about 1.2% sequentially. Loan growth pretty much better than what they have seen in last year Q1, up about 14.5% YOY and 3.8% sequentially. The net interest income has grown by 26% YOY and about 0.06% sequentially. Net interest margin has seen a decline by 16 basis points quarter-on-quarter to 3.08%, and they have reported PAT growth of 307% YOY and about 8.5% sequentially. Back to you.
Okay, that is about PNB, but let's stay with banking earnings. Axis Bank has missed street estimates in the first quarter. Net profit came in at over 5,700 crore rupees versus an expectation of 5,900 crore rupees. Abhishek, coming back to you, give us the key highlights.
Operationally, it looks like a weak quarter for Axis Bank. The good part about the results is that the advances growth of 22.5% YOY is perhaps the best in last 28 quarters. Asset quality pristine. It is one of the best in last 8 years or 32 quarters, with gross NPA ratio at 1.96% versus 2% on a sequential basis. NII, that is coming at 11,959 crore. We are working with a number of 12,018 crore. So that's a miss of about 0.5%. Net interest margin is the lowest in last 3 quarters at about 4.1%. Quarter-on-quarter, the operating profits have declined by 3.9%, which is the weakest in last 4 quarters. And core operating profit, that's declined massively by 8.2% quarter-on-quarter, the highest decline that you are seeing in last 10 quarters. They have reported a PAT of about 5,800 crore. We are working with a number of 5,961 crore, so that's a miss of about 2.75%. Back to you.
Okay, all right. That's about the big name, that is Axis Bank. Thank you, Abhishek, for that. Moving on to the third headline now. 2 top pharma companies have beaten estimates in quarter 1. Dr. Reddy's and Cipla have reported strong growth. DRL rallied close to 1% and Cipla gained over 1%. Ekta Batra is here with the highlights. Ekta.
Thanks for that. Yes, well, both of these companies, Dr. Reddy's as well as Cipla, have reported better than expected numbers for Q1 of FY24. I'll start with Dr. Reddy's. Dr. Reddy's net profit has come in at around 1,400 odd crores, which is better than expectations. The revenue has risen to around 6,700 crores plus, which is also better than expectations. And margins have come in at around 31%. The street was working with around 25%. Now, one of the key drivers for Dr. Reddy's this quarter is definitely the North American business. They have benefited from selling the generic version of the cancer drug Revlimid generic in two strengths, and that's what's really aided them. The North America business is up 79% on a year-on-year basis. Europe is up 22%, and emerging markets has grown as well, whereas India has declined both Q-on-Q as well as on a year-on-year basis for Dr. Reddy's. So the key growth driver definitely has been the North American business. Now coming to Cipla, it has been a top-down beat for Cipla as well. Revenue up around 17% on a year-on-year basis. EBITDA margins have improved all the way to 23.6% versus estimates of around 22 to 23 odd percent, and a profit of close to around 1,000 odd crores. The street was working with around 836 odd crores. India has grown close to 12% in what was a sluggish market according to the company this quarter. North America, again aided by Revlimid generic, has reported a growth of around 52% on a year-on-year basis. $222 million is what they've reported in North America versus estimates of on the upper end of around $218 million. So both of the companies have definitely reported a good set of numbers, but whether or not these are sustainable going forward in terms of the US business, considering that they have been aided by one-off opportunities, will be something that the street will watch out for.
Okay, all right. Ekta, thank you so much for joining us. So those are two big pharma names that reported numbers today, but it was an earnings heavy day. So BPCL is the one that we are going to be talking about right now. The numbers were better than what the street was working with, largely led by the refining segment. The stock, after seeing highs of 1%, closed absolutely flat. This was led by the refining segment because the GRMs came in at $12.64 per barrel versus $11 per barrel. Quickly taking a look at what the numbers look like, it was expected to be a strong quarter, and it has turned out to be like that. Revenues came in at 1.12 lakh crore rupees. EBITDA was higher at 15,800 crore rupees. Margins came in at 14% versus an expectation of 12%, and profits came in at 10,550 crore rupees versus an expectation of 8,900 crore rupees. A definite beat there. Now, if we talk about the refinery throughput, it is of course lower on a quarter-on-quarter basis, but it was much better than what the street was working with, and that's why the beat. And also in terms of the market sales, the expectation was of around 12.3 to 12.4 MMT. The company has done sales of 12.75 MMT, so that bodes well for the company. So good numbers coming in from BPCL, but yes, flattish moves that we saw on the stock today. Moving on in more earnings now, Shree Cement rallied over 2% after meeting street expectations in the first quarter. The company has reported revenue of nearly 5,000 crore rupees versus an expectation of over 4,700 crore rupees. Profit also came in much higher than street estimates. However, Shree Cement's margin saw some compression this time around. Nigel D'Souza joins in with the numbers and the analysis. Nigel.
Well, Shree Cement's numbers were pretty much in line with what we were working with. The volumes came in higher by close to around 19%, and that was bang in line with what we were working with. But on the top line, there was a beat of close to around 200 crores, telling you that either the product mix was better than expected or they had a higher amount of sales coming in from the power segment, which now they don't disclose. The EBITDA number, though, bang in line with what we were working with, and in fact, the profitability was a little bit higher, and I'll explain that to you in just a bit. Now, the reason that the operational performance looked pretty steady is because power and fuel costs, that was up by close to around 4% on a year-on-year basis, but it declined by close to around 3%. Now, that's encouraging. And if you look at power as a percentage of sales, well, that as well did decline closer to around 30%. The reason that the PAT number was much better is because the effective tax rate was lower and other income as well was higher than what the street was working with. Finally, they also announced some kind of expansion in the south as well as west of India. So they continue with their expansion plans, and they also said they're cooperating with the authorities on that IT survey. Back to you.
All right, Nigel, thank you so much for that analysis. With that, it's time for a break now. Stay tuned. We'll be back in a jiffy with the other headlines. Ari? Okay. Okay. Okay, got it. Okay. Tech Mahindra missed estimates in the first quarter. Profits were down. ये क्या है? कौन मूव कर रहा है? मुझे करने दो ना मैं. अरे but let me take the read irrespective ना. They'll have to patch it anyway. Held करने से क्या होगा? Nando. Welcome back. You're still tuned into Markets Today here on CNBC-TV18. Well, we are analyzing a lot of earnings that have been coming by. So let's talk about the fourth headline now. Tata Consumer Products came out with an inline set of numbers in the first quarter just a while back. Manglam Malu is here with the analysis. Manglam.
Well, these are perfectly inline set of numbers. Never seen numbers so close to what the analysts were anticipating. The only internal positive is that the India business has been doing much better than the international business itself. So just to run you through the numbers, the revenue of the company was 3741 crores. The street was working with a number of 3745 odd crores. The EBITDA coming in at 545 crores and the street was working with a number of 535 crores itself. And as a result of which margins were in line and the net profit at 338 crores, bang in line with expectations of 332 odd crores itself. If you just take a look at the revenue by geography, India business grew by around 15.5%. The street was working with 10 to 12% sort of growth coming in. International business, however, grew at just 7% versus street expectations of 10 to 12% as well. So India outperformed, international underperformed, as a result of which overall numbers were largely in line. What stood out was the India foods business grew by 24 odd percent, and this again was in line with expectations of 23 to 25 odd percent. And beverages grew at 10% with a 3% volume growth. A large part of that was price led, and growth businesses now account for 20% of their overall sales versus 15%. So that's a big positive. And Narishco, remember this is the beverage arm of the company, has grown revenues at 60%. The revenue run rate is now close to 293 odd crores. This at a time when there were adverse weather conditions. So that's a big positive as well. Going into numbers, the stock was at a record high, expected to continue to be that way.
Okay, all right. So that is Tata Consumer Products. So let's stay with earnings. L&T gained close to 4% on the back of their quarter one results. Revenue saw a solid jump of 34%, while EBITDA also came above estimates. R. Shankaraman, the whole-time director and CFO, says infra segment is where the pain points are seen. Also adds that the core margin guidance for the year is at 9%.
All the conversation around margin is infra segment, because I think the hydrocarbon segment and the manufacturing segments have actually reported improvement in margin. So let's possibly dive into the infra segment, which is where the margin pain is being experienced. So we waited as long as we could and then went ahead and sort of bitten the bullet, committed the costs, and that has enabled us to actually report growth in sales volume now. The momentum of sales growth that you see in the last quarter of the last year and the first quarter of the current year is largely as a result of execution pace picking up so that we could complete projects on the time committed to our customers. So it became inevitable that the jobs that we were executing had inherently diluted margins than what we actually got into the contracts with. we reported a margin of 5.1%. 6.5% was the margin last year. I'm just talking about the infra piece. The P. Okay. On a normalized basis, this segment has a potential to make about 8% margin. When you mix it up with the manufacturing activity that we have and the hydrocarbon business that we have, then the margin profile improves from the 8% for infra segment to a blended average of 9.25. That's where the margins will be. So our efforts would be through the subsequent quarters, discover our path back to those kind of line. Our guidance for the year given out in May was 9%. So we've not yet gone double.
Okay, the day is all about Nifty earnings. Tech Mahindra also missed estimates in the first quarter. Profits were down 38% and revenue declined by more than 4%. Reema Tendulkar joins in with the key highlights and the analysis. Reema?
Thanks so much for that. So it's a very weak quarter from Tech Mahindra. A big miss on top line, big decline seen in margins. Order wins have fallen by 40% on a quarter-on-quarter basis. So you cut it whichever way. This is a clear miss. Now, dollar revenue has come down by 4% on a quarter-on-quarter basis, while constant currency revenue growth has fallen by 4.2% on a sequential basis. This is far worse than the 2.5% that the street was anticipating. And here the big problem came in their communication vertical, which is about 40% of their revenues. The CME vertical, the communication media vertical, has seen a revenue decline of about 9.5%. So that's where the big problem is. Now, because of the decline in revenues, and plus there was a provision that the company took on account of one of their clients hitting bankruptcy, the margins have come in at a multi-year low. In fact, in my memory, I haven't seen EBIT margins at 6.8% for Tech Mahindra. There is a one-off element in it, but still 6.8%. And that's led to a 38% decline in profitability. And even the deal wins have sharply come down to about $359 million. Back to you.
All right, okay, thank you so much, Reema, for joining us and making sense of these numbers. In more stock-specific news, Canfin Homes tumbled over 9% after 3 employees committed fraud of 38.5 crore rupees at its Ambala branch. The employees have misused the check signing authority. Abhishek joins in again with the key takeaways from the conference call. Abhishek?
Well, the key takeaways from the conference call, as you mentioned, is the check signing authority has been misused to withdraw about 38.5 crore under the names of family members of those authorities. So rather than transfer from the pooled account of, Canara Bank to Canfin Homes to borrower's account, that is, it was directed to the saving accounts of the, 3 persons named Kins. So there was a lack of oversight in diversion of funds. Canfin Homes will be moving towards a centralized system by the next month, and funds diverted through 200 instruments with an average ticket size of rupees 2 lakh from November 21 onwards. So it's been going on for a little more than 1.5 years. The temporary disruption can be expected in the disbursals of Q2, which is in the range of 0 to 5% as per the management on a sequential basis during the transition that they are trying in the centralized system that they are placing in. So full impact will be taken in Q2, and the PAT for Q2 will be around 140 to 150 crore versus 180 odd crore that they reported in Q1. Back to you.
All right, that is about Canfin Homes, but let's move on to the fifth headline now. It is a CNBC-TV18 exclusive. RBL Bank surged after a CNBC-TV18 exclusive suggested that the Mahindra Group has likely acquired 4% strategic stake in the bank. Nisha Podar joins us with the details. Nisha.
That's right. 2 independent sources with direct knowledge of the developments have shared with us that Mahindra Group entity may have bought close to 4% stake in RBL Bank through various open market trades in this particular month. What we also gather is that it's not a pure financial investment by Mahindra Group. This is done with a strategic intent to up the stake to 15 to 25%. At least that is the ambition and intent of Mahindra Group, for which, of course, they will require several approvals, especially the Reserve Bank of India's approval. To the whole argument of Reserve Bank of India's thought on corporate house or industrial house, getting a banking license, well, that's not allowed. But in terms of picking up stake in a bank, up to 10% is allowed by the Reserve Bank of India. And beyond that, if Mahindra Group wants to have a strategic stake of higher percentage, then definitely they require RBI's nod and even dispensation to some of the rules. But also remember that that RBL Bank has faced several issues in the last few years, even with the top brass change and several other aspects where sources do tell us that RBI could be looking at a long-term solution to RBL Bank as well. We do gather that Mahindra Group, with the strategic intent and ambition for a higher stake in RBL Bank, is excited about the various group entity synergies that this particular strategic entry may bring to the table for them. We reached out to both the companies. Mahindra Group has said no comment. RBL Bank has declined to make any comment on our queries on this development.
Nisha, thank you so much for joining us with those details. With that, it's a wrap on this edition of Markets Today. Thank you for watching.